All right. I hope everyone is having a great weekend. Looking forward to this market update on this beautiful Sunday morning. We're going to be going through SPX denominated in M2, so US money supply. I'm going to go through the NASDAQ. I'm going to go through Bitcoin. I'm going to go through yields, specifically looking at the 10-year, and I'm going to look at the dollar. I'm also going to be um, kind of comparing some things we talk about a lot, especially with the members. I focus a lot on trying to transfer knowledge. My This content is geared towards kind of teaching you as much as it is me enjoying technical analysis and diving into these charts, but kind of giving you the tools to be able to analyze the things that you enjoy to follow or assets you're in or whatever, to kind of think about those things through the lens at which I do my analysis. And so we're going to be looking at high time frame reaccumulation structures, and that's kind of partially the theme of today. And just a reminder, I'm not a financial advisor. Don't take what I'm saying here as any kind of financial advice. As always, all the things I talk about, they could go up, they could go down, they could go sideways. I'm just here to give you my perspective, my convictions, and that's what we're doing. And so, when I say high time frame reaccumulation structures, why are these so important? They're important for a couple reasons, and everything's kind of linked, right? So, a reaccumulation structure, in essence, the first half of it is a correction, whether we want to talk Elliott wave or rounded bottom or cup and handle. The first half of the cup, the first half of the reaccumulation, the three major legs in a downtrend, the Elliott wave, the ABC, or the WXY. These are the first half are the corrections essentially, right? The second half tend to be the beginning of the uptrend, and the middle tends to be your stage one basing, right? So we know I combine trend analysis, Wyckoff, and Elliott wave. And so when we think about what's the strongest of those signals for me, generally speaking, it's the combination, but the high time frame structures are where we start, okay? And when I posted this chart on X, and I think I posted this, I did the video on this here as well, back when everyone was kind of freaking out with the tariff narrative and the news was the worst. I posted this chart and I said, look, this is a generational. I think I said this was a generational in the video. I just posted this chart on X with not a lot of commentary when we were down here. The candle was here, okay? And the theory and the thought process was, folks, what we're looking at in essence is a massive reaccumulation. This is an A wave. What's an A? A is an impulse. 1, 2, 3, 4, 5 in either direction, okay? And this is impulsive. What's this? What's that? This overlapping nonsense, right? Overlapping, overlapping. We don't need to be concerned with, counting all these waves if we're not an Elliott wave expert. It's a B wave, right? The B wave. A, B. What's this last final? Look at that stab down. What's that? That's an impulse, right? Not all that complex. I don't need to sit here and we don't have to necessarily count and trying to find all these, 1, 2, 3, 4, 5. But you can kind of do this on your own with what you're covering. And generally speaking, at the conclusion of three major legs in a high time frame, you can make some assumptions and start looking for bottoms. And here, what was that? SPX denominated in U.S. money supply, March 2009 hit a bottom. And what has it been doing? And what is this? This is the first half of this. What is this? Reaccumulation structure, rounded bottom, whatever you want to call it, Wyckoff, where you have the preliminary support, you have a selling climax, you have a secondary test. We've got a test, an LPS, sign of strength, sign of strength, sign of strength, expansion, test. So SOS up here, test, and then and what comes next? Expansion. That's what comes next. Where's the proof in any of this stuff that I'm talking about? Well, let's go look at what happened the last time we saw a high time frame, whatever you want to call it, reaccumulation, Elliott wave counts. I don't care. When did this happen, and when was the most similar setup to what we're undergoing right now? What's happening right now? It was from 2019, excuse me, 70 all the way up to 1996, okay? 1996, where we had, right, these moves down, and then we had this slow move up. And this was the reaccumulation, rounded bottom, no handle. Sometimes you don't get a handle, sometimes you do in these structures. Break out, and what did it come back to retest? The breakout structure, the PS, preliminary support, and then it goes under. That was the ceiling, and it came back. This is 1996. It came back 30 years, 20 years. Yeah, whatever. 20 to 30 years later. I don't edit my videos, but if you haven't already figured that out, I just do these on the fly and we let them rip. And so here we go. Back to the breakout, and what happened after this massive reaccumulation? What happened? It went parabolic. It went parabolic. And let me zoom in specifically on the moment in time. The moment in time. This is why I continue to say this market is so far off sides, and the wall of worry and the fear at every drop is our best friend. If you're long risk assets and you're not an active trader, then this is the best market of your lifetime, in my opinion. This is the best market of your lifetime. And what's coming in the next 6 months, year, 2 years, it could be 4 years, it could be 5 years. When I get asked about timing a lot, I continuously say whatever I think the timing is going to be, it's going to be wrong. Okay, it's going to be wrong. I'm not foolish enough to think that I'm going to be able to project this type of volatility. Who the heck could have projected this volatility? I think Druckenmiller said, or one of the famous fund managers said, they were shorting tech stocks here and lost, billions of dollars. The idea wasn't wrong, right? The idea wasn't wrong. Let's say you went short here, okay, back in 1998 after this massive move, right? And by the way, this is where we are right now. We just retested and we're having a power month off the retest, in my opinion. Very similar structurally. What happened if you got cute shorting here? Ooh, you just did really well, right? Look at that short paying off, and then they blew them out. They got blown out to the tune of 1, 2, 3, 4 years, and the NASDAQ doubling or tripling in that time. Very difficult to start calling tops. Most certainly not going to hear me calling any kind of top when we have what I'm pointing to there is now appearing right here. Are you kidding me? No, that's not going to be me. What I will do is get cautious. We get up into this territory, I'll get cautious. Okay, I'll get cautious. I'll take some chips off the table and raise some cash. But that's still 70%, potentially 75, 80% S&P denominated in M2. So I don't know what to say. I don't know what to say. And so this is what the setup is presenting, how it's presenting right now, looking very constructive. Let's go back to the NASDAQ. Let me move this. This exercise, we did a lot. We did a lot in the depths and despair of our massive drop in April. And I kept on saying to us, so we remember this chart, I hope, for those of you. I said there's no evidence of trend change. There's two pieces of evidence in the last decade of trend change in the NASDAQ, and we didn't even see one of them here, okay? And mind you, I was saying trend change occurred when no one was expecting it. What am I pointing to down here? This is the fear and greed indicator, and extreme fear is this line at the bottom. We were barely moderate in terms of fear. And what did the market do? Again, this is about teaching you how to kind of identify and trend change, and less about, hey, I was right. Look, this is about helping you identify trend change. On a high time frame, there's two things that I look for. I look for, obviously, change in market character is number one. Break in structure is also, number two. But more importantly, what are we doing in relation to the 30-week moving average, the simple moving average? What are we doing in relation to Ichimoku cloud? And what's the general sentiment at the time? So I'll combine all those things. And all we had was a change in character. We didn't have any of the other three. So, for example, uh, we had change in character, okay, come back up, reject on the 30-week, gain acceptance back into the cloud, break of structure. No fear. That's a trend change when no one's thinking about it, okay? Boom. Same thing back in 2018. No fear, no fear. We got a change in character, up to the 30-week, rejection, acceptance back into the cloud, break of structure, trend change. Okay, 13% more downside in that scenario, 19% more in the second scenario. The problem was here is we had fear readings at the highest, higher than COVID, while news was driving it, so narratives. Everyone was expecting it, and I'm assuming positioning for it, and all we had was a change in character. Okay, no underside rejection of the 30. And so as we came back up, did we get an underside rejection of the 30? No. What did we get, actually? We got a reclaim of the 30, and we got a reclaim of the cloud. That's what's going on right now as of Friday's weekly close. So when we look at, when we look at the analysis for this week, it's very strong. Okay, this is very strong. This is what I've been expecting, is a V-shaped recovery. And now you've got the 30-week reclaimed. And are we going straight up? No, everyone's expecting we need to gap down because of this Moody's downgrade, which really wasn't a downgrade. Who the heck cares? I have no idea what we're going to do Monday. Wouldn't surprise me if we gapped down. Wouldn't surprise me if we were flat. Wouldn't surprise me if we gapped up. All I know is we're above the 30-week, and it would not be uncommon to get a retest of this 30 prior to moving up. Everyone wants this cute little shoulder. This right shoulder ain't happening. Ain't happening. I'm sorry. That's what I'm calling that right here. I'm generally not that decisive when it comes to short-term analysis, but I'm going to make that call. So I see another, worst case 4 or 5% maybe this week. Maybe not. But I think it gets bought very quickly. Any type of weakness, I think, gets bought very, very quickly. These markets have a lot of power and strength in them. Much like back in 2020, V-shaped recovery, same set of conditions. Everyone was scared. We actually ended up doing the opposite of what everyone was thinking. We reclaimed the 30-week. We got a test of it, which was 4 to 5% back, and then the market went up to the tune of another 50% through September. Okay, so we're sitting in front of what I believe is an incredible rally that has just gotten started. You're basically staring down the barrel of an early innings COVID style recovery, potentially with more fuel. Because which way are rates, in my opinion, my analysis, which way are rates trending to go? Down. Down. Here we were moving potentially into an inflationary environment. Whereas now I think we're kind of moving into a deflationary environment. But the market's not necessarily, I guess, in sync with that. So long story short, that's kind of how I'm thinking about things. The analysis on the reaccumulation that I just shared with SPX denominated in M2 is another way of looking at it. Look at this. This is a chart of Eli Lilly. This is a monthly, 2-month chart of Eli Lilly. This is less about what I think about Eli Lilly as it is about how powerful reaccumulations can be, and not trifling, and not trying to tick and tack and jump in and out of these things. Imagine trying to jump in and out of Eli Lilly as it made this move, right? So what does this look like? All-time high, A, B, 1, 2, 3, 4, 5, C, 1, 2, 3, 4, 1, 2, 3, 4, 5. Cup, No real handle. The handle was kind of the consolidation was above and beyond it. Extended fifth wave. Okay, this is a massive reaccumulation followed by a massive expansion in the form of an extended fifth wave. What else looks like this? Let's see. You guys know I'm being sarcastic. You knew it was coming next, right? Bitcoin. Bitcoin. 3, A, B, 1, 2, 3, 4, 5, C, 1, 2, 3, 4, massive cup, handle, 1, 2, just completed in my opinion. These aren't facts, right? Well, they become facts after the fact. 1, 2, breakout, 3, 4, 5. And so looking at Eli Lilly, look at this extended fifth. I mean, I'm being very conservative, mind you. I'm being very conservative, in my opinion, with the forecast here on Bitcoin, with a 300 to 400K forecast. Would not be surprised if it's exceeded greatly. Would not be surprised in the least, folks. So in the short term, who cares? Who cares? Who cares what happens tomorrow? Next week, the NASDAQ could go down 6% and Bitcoin could be up 45% in the next 3 weeks. Wouldn't surprise me at all. 10-year. 10-year is, I think, still forming this right shoulder. It's a complex right shoulder. We've seen them. I've been calling for this right shoulder. Last week, I said we closed right below the 30-week. I was expecting a move down. We got to move up, but we didn't make a new high, mind you. This is a complex redistribution, in my opinion, where we've got a shoulder, head on a failed breakout, late in a distribution. This is really bearish. This is a very bearish. This is all overlapping waves. I see nothing impulsive here. And so we have an inverted type of hammer candle on the weekly. So I think this move is just getting exhausted. I really do. And I think I continue to think the high time frame move on rates is down. Okay, so no real change there. The dollar is moving like we've been expecting it to move since January. We've got another complex redistribution in play. Excuse me. We had a 1, 2, and I've had this 3, 4 out here for the last month. What are we making? A 3, 4 right here at the sign of weakness, under kind of testing the underside of this entire breakdown. So ceiling, in essence, testing it. Next week could be the week this thing starts to mark down. And so we'll see, or maybe not. Maybe like the yields, we get one more kind of move back up. It gets in the inside of this range and really fakes everybody out before the move down. I don't know, but this was the zone I was looking for, a consolidation check back, and that's what we've got. So folks, that's it. That's the weekend market update. Hope you all have a great rest of the weekend. We'll keep the additional content going for the members, and thanks for all the support.